the WuBlockchain Podcast. For the latest blockchain and crypto insights, subscribe to WuBlockchain on YouTube and follow us on Twitter. Stay informed and join the conversation. Today, we are excited to welcome Sam MacPherson, CEO of Spark, to join us. Let's dive in. Could you briefly introduce yourself and explain Spark's core role within the Sky, formerly MakerDAO ecosystem?
Yeah, sure. So, hello, everybody. I'm Sam MacPherson, CEO and co-founder of Phoenix Labs, and we are a contributor to Spark. And so, Spark exists within the Sky ecosystem. And the best analogy to use for this, although this is not strictly true of what these things are, I think it's a useful analogy, is that you can think of Sky as like a central bank that is a currency issuer. And then Spark is more of a commercial bank that does the actual loans and growth initiatives for the protocol. So there are multiple sub-DAOs, aka stars, that are connected to Sky, and each of them is able to have the same access to borrow from Sky wholesale and then lend out to the wider ecosystem. And then each of these stars can keep the net interest margin as revenue for the star. So Spark is one of these stars. It's the first and the biggest right now, but there will be more in the future. So it will be a competitive environment.
So what prompted Spark's pivot from a lending protocol to a capital allocator focused on real-world assets?
Yeah, so Spark, just for some history, Spark launched in May of 2023 as originally just a lending protocol. But we since have shifted more towards the newer product, which is called the Spark Liquidity Layer, which launched at the end of last year and has grown quite significantly. It's already at 3.9 billion in assets that have been deployed, earning APY of 4.95% as of recording. And this is the reason for the pivot is because lending markets are fairly restricted. They're useful, and so we still have SparkLend, our internal lending market, as one of the targets for the Spark Liquidity Layer. But the Spark Liquidity Layer is the more general version of lending, where you can deploy into opportunities across DeFi lending, CeFi lending, as well as TradFi lending, aka RWAs. So this would be stuff such as tokenized Treasury bills, corporate debt, etc. And the reason is our goal is to produce the best risk-adjusted yield for depositors into Spark savings. So this yield being generated right now of, as I mentioned, 4.95% on 3.9 billion deployed is quite good. It can outperform just the DeFi markets alone, and so this yield can sometimes significantly outperform something as basically just a lending market. And so that was the reason for the pivot.
Spark recently announced an additional $1 billion deployment into tokenized US Treasuries. Can you detail the strategy rationale behind this substantial commitment?
Yeah, so Spark is responsible for deploying Sky's balance sheet. And when there is an excess of capital that is sitting in stablecoins, it makes more sense to deploy this excess capital into tokenized treasury bills to boost the yield even more. So stablecoin yield is more like on the order of 3.8%, whereas tokenized treasury bills can generate more like 4.2%. So this is just getting this extra 40 bips or so yield out of the balance sheet to, again, the goal here is to produce the best risk-adjusted yield. Tokenized treasury bills are basically wrapping the risk-free rate for US dollars. And so it makes complete sense to put excess supply into them to provide the best yield possible for users.
Were there specific indicators or market signals that made this timing particularly advantageous?
Yes. So the market conditions, they're starting to change a bit to be more bullish. But when the market is more bearish, real world assets become increasingly important. And so this is because the balance sheet works such that When the market is more bullish, loans will switch into usually DeFi loans or provide capital to the funding rate on centralized exchanges, stuff like this. And more people want to borrow because the market is bullish and they want to borrow against their assets usually and then leverage up and buy more Bitcoin or Ether, what else. And so this is the sort of push and pull of the balance sheet. And so naturally, RWAs just become important in bear markets more so, but in bull conditions, they decrease as well a bit, but we still have a good chunk of the balance sheet in RWAs at this moment because the market, although is hinting at a bullish turn, has not fully gone bullish yet.
Mhm. How does Spark reconcile DeFi's decentralization ethos with investing heavily in centralized institutions like BlackRock?
Right. So decentralization is kind of an overloaded word. I think it's more important to look at the specifics of about how the protocol is constructed. So things like governance are designed to be decentralized in the whole process with the Sky Star system. When it comes to the actual allocation, most things in DeFi are have some sort of custodian attached to them. RWAs is a pretty broad category, and it actually covers stable coins as well. So the original RWAs, such as USDC and USDT, these big stable coins, this is these all have custodians attached to them, but I think this is okay in practice. I think the values that DeFi bring are, it's a lot of things, but with this system, the biggest advantages of coming on chain are transparency, auditability. So with USDS and Spark, you're able to see a complete breakdown of where all the capital is deployed, right down to the last dollar. And this is very important for people who want to know where their money is going. And this is the big advantage that DeFi systems have over TradFi, where often these things are more opaque and hard to see into.
What type of return profile does Spark aim to achieve through its latest deployment? And how does this align with traditional yield benchmarks like Treasuries?
Yes, so we aim to outperform the Treasury market at least. So that is the baseline yield. As I mentioned before, for US dollars, Treasury bills are considered more or less the risk-free rate. And so depositors who are sitting in any US dollar yielding project should be receiving something around the risk-free rate, in my opinion. And so Spark's goal is to return at least that. And in current conditions, it is outperforming it by, around 50, 60 bips. And when the market turns bullish and the balance sheet gets more reallocated into crypto leverage type loans, then the rates will go even higher. They peaked at 15%, for example, in the previous bull cycle that was about 6 months ago.
So why did Spark choose to double down on the same three recipients, BUIDL, USTB, and JTRSY?
Yeah, so these are top tokenized treasury bill products in the industry, and we were already working with them, so it made sense to just allocate more. They're great partners, and the fees were negotiated down to very good numbers. So why not use the same providers?
What role did the tokenization Grand Prix play in the selection process, and what evaluation metrics and stakeholders' financial use?
Yeah, so the tokenization Grand Prix was a contest that we ran starting at about this time last year, and it finished up in March of this year. And the qualification criteria that we were looking at, mostly it was fees. So fees are there was a lot of applicants. I think 30 something applied, and they were all basically competing on fees. The other major consideration is like the partner quality. So for example, like BlackRock is a very well-known name. Like partnering with them, they're a top-tier partner, and so this was sort of the selection. So the three that made it are top-tier brand names in the industry, and they were very competitive on the fees.
How do you view the role of tokenized treasuries in stabilizing DeFi yields?
So as I mentioned before, when the DeFi rates are high, Spark will allocate more into DeFi loans. And when the DeFi rates are low, aka we're in a bear market, tokenized treasuries play an extremely important part because they pass forward this risk-free rate to stablecoin holders. And so this is important for just making sure that the yields are optimized, and this is why something like the Spark Liquidity Layer is able to outperform just a traditional DeFi lending market.
So what differentiates Spark's approach from competitors?
Yeah, so Spark has been operating for a while now. I would say trust and scale. So Maker's one of the original DeFi protocols. It launched in 2019, the DAI stablecoin protocol. And me and my team, we've been working within the Maker ecosystem for a long time now. So we know smart contracts, we know safety, we know how to do due diligence and underwriting on a lot of this stuff. And we've never had major incidents ever. So this track record can't really, and it shows in the scale. So people are trust us, and this is why we have around 7 billion in total deposits as the third largest stablecoin protocol that exists today. So to me, I think this is the competitive advantage, but we're continually optimizing the processes and transparency and on-chain auditability is a very important differentiator that we strive to achieve as well. So that when you invest into one of the savings products, you're able to see where your dollars are going right down to the last like really high detail, as opposed to an opaque black box where you're just trusting that somebody is operating the money correctly.
That's cool. What is the role of the Spark liquidity layer in automating liquidity provision? And how does it enhance operational efficiency?
The Spark liquidity layer is the key to everything. It's the big innovation that has come out of Spark, and we've been really ramping it up. So as I mentioned, it launched just at the end of last year, and already we're at 3.9 billion in assets being deployed through the Spark liquidity layer. And this goes into many different things, and we've been expanding these opportunities rapidly. So it goes into DeFi money markets such as Spark Lend, the internal lending market, Aave, Morpho, Fluid, as well as the Treasury bill yields. So we've ramped that up as well. And another things that have been added more recently is the integration with Coinbase, their Bitcoin Borrow product, which links through Morpho, so that Spark is actually 80% of the capital that is supplied to this market. And these are new users that aren't using DeFi. They're instead using the Coinbase app directly, but they're able to get loans against their Bitcoin at a reasonable price. And Spark is powering this whole thing, the Spark liquidity layer. And another more interesting thing that we've done recently is access to crypto OTC lending. So some people prefer to, and usually like institutions and stuff like that, prefer to do borrowing against Bitcoin usually, but they don't necessarily want to do it on chain, at least not yet. So we are depositors, major depositors into the Maple protocol, which is an RWA protocol which bridges the gap between DeFi and CeFi. And so we've just deployed 200 million into there, and that yield is quite good. And this is being generated by people who are holding Bitcoin and custodians off chain, and they want to take loans against their Bitcoin.
Given the volatility inherent to crypto markets, how does Spark manage risk and maintain yield stability when investing in tokenized treasuries?
Yeah, this is a very important consideration, and actually one of the most important things that any stablecoin protocol needs to adhere to, which is maintaining a liquid cash reserve to allow people to redeem back into fiat when they need to. This is effectively supporting the peg. So, as I mentioned, Maker's been around for a while, and this is our bread and butter. We've done this for a long time, and we've been able to maintain the peg through bull mania and bear despair, and so that's been just super robust of the years. So Sky defines a cash reserve requirement that is set for all of the stars. So Spark is adheres to this as well. So we maintain 25% cash reserve in the balance sheet, and this is kept as a extremely conservative number. For comparison, banks are more on the order of like 10% cash reserve requirements. So the reason of the 25% is precisely because crypto markets are so volatile. And so we need to make sure that people can always redeem their stable coins when they want to. And so this is why a 25% cash reserve. But this is a testament to how well Spark works, is that it's able to generate these sort of APYs even with this cash reserve requirement.
Has Spark conducted just testing scenarios for extreme market events?
Yeah, so we have a lot of experience with extreme market events over the years. They're actually getting less and less extreme over time as crypto markets mature. I would say one of the bigger ones that we experienced was the 2022 market crash. There were several significant events. I think the biggest one, for example, was Terra Luna. We were able to ride through that gracefully, even after the market suffered a pretty cataclysmic event. There was about 2 billion in redemptions in I think it was about 3 days. This was 20% of the it was DAI at the time, DAI supply, and it was no problem for the protocol to handle that. So I think this is a testament to the robustness of our strategy.
How important is regulatory compliance in your operations, especially given the scale of your investments?
Yeah, regulatory compliance is very important in general. I think especially with real world assets. The interface between so the DeFi native world and the RWA section, these are kind of two distinct things. And I think that RWAs should be designed to be very simple, such as a wrapper on a tokenized treasury bill, basically, or tokenization of gold or whatever else you may have you. The regulation there should be fairly strict and simple and easy to follow, precisely because it is such a simple thing to do. You're basically custodying some off-chain asset, and then the issuer is minting tokens on chain. Once you get on chain, you have a different set of guarantees. So smart contract enforcement, I think, is one of the best things you can possibly have for guarantees. And so with this and transparency, I think this all combines into a much more robust system than traditional finance.
Beyond tokenized US Treasuries, what other RWAs are Spark exploring for future investment?
Yeah, so the next likely candidate is going to be corporate debt. This is a AAA corporate debt, so investment grade quality corporate paper. And this is basically, if you are a US dollar interest bearing product, then you basically just look to push out the risk curve as long as it's reasonable and safe to do so. So T-bills are basically the lowest possible risk thing you can have, and then you can either push out in terms of duration or in terms of risk profile. So corporate debt is sort of the next thing up the ladder, and it makes sense as the next scalable candidate to onboard. Beyond that, I think things could move as much out to things like private credit. We're going to see a lot of interesting variety within the stars, and it's really up to each of the stars to decide how to um, pursue these different opportunities, provided they are adhering to the Sky Risk framework.
Does Spark have specific strategy initiatives or partnerships aimed at capturing opportunities in regions such as Asian Pacific?
Yes, so Spark is running a number of programs in Asian regions. Something that we have Telegram groups for Korea. We have a lot of marketing and outreach there. We've been engaging and getting feedback from the community. We're running. There's a Snaps program running on X, Twitter, where people are snapping for points and stuff like that. And so we've just seen a really amazing outpouring of interest from the APAC regions. We're very excited to continue to invest and grow there.
Mhm. Spark operates as a modular protocol star within the Sky ecosystem. How does this modular structure benefit operational agility and governance?
Yeah, so this is MakerDAO. Previously, Sky was called MakerDAO, and so the governance structure was all fit within one DAO, and this didn't really work to scale. And so the sub-protocol star system is just way more optimal for operating in the real world. And the idea is that the central component, which is Sky, the issuer, doesn't really decide on anything other than just setting the general rules, the risk framework. And then each of the stars, such as Spark, is able, as long as they're following this risk framework, they're able to move much more quickly. So Spark is able to onboard new collateral, new protocols in an extremely quick way. So as I mentioned, Spark Liquidity Layer has only been around for 6 months, but already we're up to 3.9 billion, and we have access to most of the lending opportunities available within DeFi, CeFi, and TradFi. So this is a testament to how quickly these stars can react, and so this is going to enable the system as a whole to adjust to market conditions while remaining decentralized on the whole.
How might macroeconomic changes, such as shifts in US interest rates or global economic conditions, influence Spark's strategy?
Yeah, this is a very interesting question. So as of right now, the crypto markets are very, very driven by the bull and bear sort of cycles that are going on, and this loan interest rates, stuff like that. The DeFi rates come from primarily from people wanting to take leverage on crypto assets such as Bitcoin, ETH, Sol, etc. And so um, we're basically, along with everybody else in DeFi, is subject to these types of market conditions. But I think we want to increasingly expand into non-correlated yield sources. So this would be more in the RWA space. So T-bills are the base yield, but things like corporate debt can provide additional yield on top of that is uncorrelated to the crypto bull bear cycles and is more correlated to the wider macro interest rate environment, which moves a lot more slowly. And because we're in a high interest rate environment right now, it makes sense to have this good chunk of the balance sheet in RWAs in these types of situations. But Spark is built as an all-weather system, so no matter what the conditions are, we're working to optimize the yield source across all opportunities.
Anything else you'd like to share with our audience?
Yeah, so we've got a lot of things going on. The upcoming token launch is very exciting. We're happy to support our users and give back to those who have been supporting us for so long. And so with the SDK token, you're going to be able to stake it, or you can use it for governance as well. And so we think this is an exciting new opportunity for users to get involved with Spark, and we're excited to launch this.
Okay, thank you for your time and sharing your insights.
Thank you so much.